Hi everyone! During today's quick tutorial, we will learn how to set up sales tax in QuickBooks Online. So let's start. Navigate to the Tax tab. I'm going to click once again. In this particular company, we don't have sales tax activated, so we're going to do it now. Just pay attention, if the company is not registered for sales tax, you don't need to activate tax module in QuickBooks. Yeah, only if they are actually registered, then we do have to activate sales tax. So let's go. Set up sales tax first, and QuickBooks is asking you in which company you want to track sales tax. Choose the province or territory. I'm going to choose first these four provinces and territories: Alberta, Northwest Territories, Nunavut, and Yukon. So here in these four provinces and territories, we have only GST. We don't have harmonized HST, we don't have PST, only GST. So very simple. First, you need to specify the start of tax period. The start of tax period will be January for us, and the file frequency, let's keep it as quarterly. But the other options you have are monthly, quarterly, half year, and yearly. Small companies usually have yearly filing frequency. For the it depends on the revenue of the company. Well, but here we're going to go with quarterly. And the reporting method is accrual. If it's a corporation, then definitely has to be accrual. GST number, GST HST number. Let's just use a fake 9-digit number. So this has to be a business number of your company plus RT 0001. So that's it. I'm using a fake one, but you're going to be using a real business number for your company. Then click Next. And QuickBooks is offering a tutorial as well, but we don't really need it now. So we're going to just hit OK. And nothing happened. So at the background, it actually activated the module for you. So if it didn't work right away, you have to refresh the page. And then if it doesn't work, you have to sign out and sign in again. And let's check now if it picked up the changes we made. And here we go. We have it. So yeah, just a few things to remember. So if it didn't work right away, it actually activated the module for you. You just have to sign out and sign in again. So here we go. We have the sales tax activated, and for now we are just tracking it in Alberta. What did we have there? Nunavut, Northwest Territories, and Yukon. Just these four. So now if, let's say, you want to add, start tracking actually in another province as well, then you have to go to Manage Sales Tax here. Here you can see what you have already. You have the option Exempt Tax, you have GST 5%, and you have Zero Rated option. Good. And it's all a CRA, Canada Revenue Agency. Now, you don't add custom rate. If you want to track in a different province, you have to add tax. Let's do it. Add tax. And here we go to the first option, start tracking in a new province. Add. And then just select the province you want to start tracking. Let's say it's Ontario. Ontario has GST HST. So here we have HST appeared for Ontario, which is 13% in 2024. While I'm recording this video, it's 13%. Okay, good. It's a harmonized sales tax. which means they harmonized their provincial tax with the government tax, GST. So together it's a HST, harmonized. Good, we have it. Let's say at some point you decided not to track this tax in this province. For example, maybe you stopped working or having business in that province. Then you can make it inactive. You cannot delete it actually. You can make it inactive for some time, and then you can activate it back. I'm gonna make inactive the HST for Ontario. Done. At any point you can just come back here and make it active again whenever you need it. So I'm gonna put it back, and done. Good. Now let's practice next. Okay, now let's go and practice the payment of installments. Let's say we have a scenario here that our company is supposed to make installment payments for GST/HST tax to CRA. And in this case, each time we make any such installment, we have to go back here into sales tax module and reflect it here, the payments. So let's do this. Let's say, just pay attention, the period we are supposed to file our first tax is from January to March 31st, January 1st to March 31st. This is how we set it up when we first activated this module. So this is the period we're supposed to file our GST/HST tax, and our installment payment has to be within this period. Yeah, if there is any mistake, you have to go back to the settings and change the period. But for us, it is not a mistake. This is what we were meant to have. So let's say we need to reflect it. So we need to go to New tab, select Installment, and record the payment. Payment from which bank account? We have RBC check-in, so this is the one, and then payment date. Remember, the date has to be within the period January 1st to March 31st. So let's say we made it on the 1st of February. Good. Then the filing date. The filing date, let's make the filing date March 31st. And the amount, done, $1,000. Now just go through your numbers once again. If it's all good, record installment. And once it's recorded, it's reflected on the balance. So remember, the balance was 0. We didn't have any sales, we didn't have any purchases in this period on this file, QuickBooks file, but we only recorded the installment payment. So that's why we have negative balance. So now I went back and created a few transactions, a few invoices and a few bills, just to make sure that we have some numbers to file, yes, some tax collected and paid. So the balance has changed, as you can see, and here from this small chevron you can see that the collected on sales tax is now $2,400, and the paid on purchases tax is negative $775. And here is the balance after these transactions, but the actual balance is $625 because we have recorded an installment payment, right? So it affected the balance. Now let's just practice filing GST/HST from here. So you just need to make sure that you are in Filings tab, and then you just go to Prepare Return. And here what it looks like. It looks exactly like the GST/HST return that you can find on CRA business account when you file from there. And first of all, check the period and dates. So the system picks up the period that is there in the settings we made. it's quarterly, well, you can change it from here as well, by the way, but it's better to change it in the settings. Yeah, so if it's quarterly, then the start and end date is 1st of Jan to 31st of March, and the filing date is just picking up today's date. But let's say in our scenario we are filing, let's say we are filing with a delay. So if you're a quarterly remitter, you're supposed to file your GST within 1 month after the end of period. So for us it would be April 30th, right? So let's say we are delayed for some reason and we are filing this report not on April 30th but on, let's say, May 29th, so with a delay. Just all you need to do is to reflect the actual dates. That's important. So this is the date, and then you have to go through the numbers, of course. So GST collected is $2,400. But first is the revenue. The revenue here for this particular period is $48,000. And that's the GST collected on this amount. If the revenue, if you just take this revenue and multiply by 5%, you should get the 2,400. If it's not, you have to check what was wrong, why some invoices prepared didn't have any GST on them. So that's why this is the case when these two amounts will not be in sync. So if everything's good here, then just go to this $2,400 and check what's sitting in there. Yeah, for us it's just one invoice. This is the one, and you can actually check this invoice. Everything looks good, GST is collected, and the GST is actually $2,400. Good. So just close it and go back to your report. We actually have to go back once again, prepare report, and this part is checked. We're not going to go through adjustments this time. So here the total GST, HST, and adjustments for the period in line 105 is $2,400. This part is good. Now we're going to go through the ITCs part. GST, HST paid by our company, not collected but paid. And the input tax credits, and it totals $775. And again, we need to check what's sitting in there. We have two transactions, two bills, one from the Home Depot and one from the 458796 Alberta Inc. So this is our supplier of materials, and this company is our subcontractor. Yeah, and the subcontractor collected also 5% GST. So this looks good. You can actually go again into these bills to check, but if everything's good, all the taxes are correct, you can just go back to the report. No adjustments, and the total ITC is again $775. And then net tax, $2,400 less $775 is $1,625. But remember, we've already made an installment payment, which is $1,000. So less the installment payment, and now we only owe $625 to CRA. Yeah, good. So that's the amount, and that's the balance owing for us. Well, if you're happy with this report and all the numbers look good, you just mark as filed and continue. And it depends, like if you wanna record payment right away, then you can do it from here, but usually the payment will come later. So first you file the report, then you are waiting for the CRA to assess this report, and then you make payments. So let's say this is the case we have here, so we're going to be paying later. Done. So once we file the report, like prepare the report, the balance is 0 again, and the period is different, so now it's showing the next period for us from April to June. Okay, and the process is also reflected here. It says we prepared the report, we filed the report, but we didn't pay the amount because we are waiting for the CRA to assess it. Okay, now let's imagine it's been assessed by CRA, and CRA also assessed some penalties and interest because we filed this report late. So let's do next. First, you need to show that you paid this amount, yeah? So to record the payment, we just stay in the filing tab and we record it from here, record payment. As simple as that. And again, you just need to select which account you're using, bank account, to make this payment, the date. So let's say if we file this report in May and we are making payment in the beginning of June. And this is the amount we are paying. And the payment amount you can change, but I wouldn't suggest to change it. Like usually most bookkeepers, they think that if they also paid penalties and interest, they would include it here. Well, there is a different way you have to show it. So here you just need to show the exact tax payment, which is $625 for us. This is what you do, and record payment. The only case when you need to show a different amount is, for example, if the company didn't have enough money and they paid less. Record payment. And then they made a second payment, for example. The remaining amount. So after you pay the whole amount, you are done. The process is completed and you can go and view summary. This is what it looks. You can spend time learning this report, but I'm going to just hit done. Okay, so we've made our first filing and payment. Now remember we made this filing later than we were supposed to, so obviously CRA assessed some penalties and interest. So how do we reflect payment of those interest and penalties here? Again, you go to this option, new, and select interest and penalty, and just go through the process. Assessment date. So they were supposed to assess our filing after we filed it. Yeah, makes sense. So maybe it was on 3rd of June. The assessment was completed. And then here you have to select the account from the chart of accounts. It has to be an expense account. Usually I create this expense account under the type other expenses, yeah, because it's actually not a tax deductible expense for the company when you pay any penalties or interest, yeah. So I already have this account. It's called penalties and interest. The type is other expenses, you can see, and the amount, let's say we owe them another $87 for this, and save. Done. It's just a simple transaction. You can record it from here, or you can just record it as a simple transaction as an expense, for example. It doesn't really matter, but it's convenient because you have this option here as well. So this is done, and once it's done, you also have this opportunity to see any interest and penalty payments here in this module, in the tax module, which is also very convenient to have it all in one place. So you see, you paid $87 on 3rd of June as a penalty, and then the filing, the next filing period, and then the filed period. So because I'm here in this all tab, so I see all the transactions I had, but I can choose, like, for example, I want to see only the filed and paid, and that would be my first period from Jan to March, which is completed. Or for example, I just want to see unpaid, nothing here for now. Unpaid, it would be filed, but the payment is not completed, yeah. And then next to file is the next period, but we always see it here as well. And I'm going to show you just a few reports here. We have, my personal favorite is a transaction by code report. I always use it before preparing to file GST/HST tax. It's very convenient. So let's say the tax we have already filed is for the period Jan to March. And let's check that period if we had any transactions in there that didn't have GST/HST. Select the period first. It's going to be Jan to March. And run report. Keep it accrual method. And you can see that the GST was collected in this invoice, and then we pay GST with this bill and another bill. But there was one bill where the GST was exempt. So we actually didn't reflect GST in this bill. What happened here? Let's check. The sales tax was selected as exempt. So we have to investigate. So let's not assume. We have to investigate what happened. And the most, in the majority of cases, it would be this scenario. You have a new supplier, and this supplier, for example, has not registered for GST/HST yet, for a whole variety of reasons. For example, they didn't make sales for up to 30,000 for a year or for one of the quarters, and so on and so forth. So they are still eligible, they are exempt of GST/HST. So this is correct. But they're making good money, which means that sooner or later, rather sooner than later, they will have to register for GST/HST and start collecting this tax from their customers, from you. So for now they are exempt. Let's close. And this was the bill dated 21st of Feb. But then you see the same supplier, subcontractor, company, on 20th of March, they have already collected GST. So which means they have already registered for GST/HST tax. Okay, this makes sense. But for example, if you see after this date, when you know they have registered and they started collecting GST/HST, for all of a sudden another invoice coming from them and it doesn't have GST. So this is when you have to double check with them, investigate, because you know that they have collected it previously. So they cannot just collect it and then stop collecting and then start collecting again. It doesn't work like this. So you just keep an eye, because sometimes those who are new registrants, they might make some typo or mistakes, and you don't want it to affect your books, especially your ITC, because this is something you're gonna subtract from your GST owing to CRA. So this is a very convenient report, transaction detail by tax code report. Before filing GST, always use it. And one more scenario for today we're going to cover is, for example, our company is doing very good, and we started making more than $6 million in revenue for the year, and the CRA decided to change our filing frequency. So now we are not quarterly remitter anymore, but we're going to change to monthly remitter. Yes, because we have a big revenue, and as per CRA, whenever the revenue is greater than $6 million for a year, they're gonna change the frequency, the filing frequency of GST-HST tax for you. So if it happened, you just have to reflect it here in the GST-HST module. You have to go to Manage Sales Tax and edit agency settings. Yeah, so within the Canada Revenue Agency, you just have to edit agency settings, and here you're going to change the frequency. Yeah, so the frequency is quarterly, and the next period start is January. Let's change the frequency first to monthly, and remember, we have already filed and paid GST for the period January to March, so our next period has to start in April. Yeah, you have to be very consistent here. So starting from April, we are becoming monthly remitter, and the reporting method is still accrual. So that's good, and save, and done. And what we have here, as you can see, the period has changed here as well. So we have filed for this period, this is correct, and it's not going to change the quarter we have filed for. And then the next period to file is monthly, starting from April 1st, and so on and so forth. At some point, it can be the opposite. For example, the company is not doing very well, and they are having very little revenue, so they have to ask actually CRA to change them back to yearly frequency. But in this case, CRA will not do it automatically. The company has to ask them. So if it happened and CRA approved you to go back to yearly frequency, again, same process. You have to go to Manage Sales Tax and edit agency settings, and again, the next period starts. If it's April, keep it as April, and then monthly you have to change to yearly. So let's say from April you're becoming yearly remitter, and save, and done. And what do we have here? This is what happened. It calculated the period of 1 year from 1st of April 2024 to March 31st 2025, and you can see this is the period to file, and it's a different period, 1 year period. With the yearly remitters, they have up to, so we have already discussed filing frequency quarterly, filing frequency as monthly, and as yearly. So now let's just go to CRA's website and make sure that we know exactly what are the deadlines to file and pay the GST-HST for those periods. So for those who are monthly, the payment deadline and the filing deadline is 1 month after the end of the reporting period. 1 month after the end of the reporting period. For those who are quarterly, it's again 1 month after the end of the reporting period. And it's exactly our example. So if the reporting period is 31st of March, then the filing deadline is April 30th. But for the annual remitters, the filing deadline as well as payment deadline is 3 months after fiscal year end. Yeah, after the fiscal year end. So if reporting period is August 31st, your reporting period is August 31st, then the filing deadline is 3 months. So August 31st plus 3 months. And it's going to be November 30th. That's the filing and payment deadline. So that's pretty much it for the sales tax. We went through the basics, and we're going to cover more about creating group rates and about created custom taxes here. QuickBooks offers us a lot how to manage the sales tax, and not just sales tax, we can create our own taxes. For example, tourism industry, they have specific taxes, and for example for meals and entertainment we can create also customized tax here. We're going to talk about it during another class.